So process costing is our first topic. Process costing is a way that we can charge the cost to each product based on the average of the process, the whole process. Uh, Normally, this type of process costing is applied to those products which are not so different, which are identical. So we apply the average cost to that. So there's a opposite to that. There is a job order costing, and job order costing is a cost in which we have to keep the cost of each product separately and figure it out that what is the total cost of that uh, job, particular job, and then we price accordingly. But here we are taking the averages. So let's start with this process costing topic. What are the learning objectives of this process costing? Distinguish process from job costing. So there are two different way of charging cost to their products. The one is process and the other one is job costing. Methods within the CN framework and apply the weighted average method of inventory. So there are three different methods that we can apply to the inventory valuation, which can be a weighted average or FIFO or a standard costing. So that's the way that we're going to discuss also in a little bit. Inventory calculation when the beginning work in process inventory is zero. So contrast the journal entries for a processing costing when there is a and when there is not ending inventory and ending work in process inventory. So we'll see the uh, journal entries regarding these two processes if there is zero ending inventory. So apply the weighted average method for process costing to calculate the cost of goods manufactured and transferred out when there is both beginning and ending inventory in process, work in process. Analyze weighted average FIFO and standard costing method of inventory valuation of cost of goods sold, cost of goods manufactured and transferred out. So apply process costing method to report transferred in cost and operating cost, operation cost. So the first of all, a very simple difference between job costing system and process costing system. So job costing system, as I mentioned, it is distinct in identifiable units of a product or a service. Like we know that when a clinic is dealing with a patient, so each patient is identifiable. So they have a different processes, they have a different procedures or different diseases, different tests. So every patient is charged very differently. Similar is the case with the very particular specific machine. If someone orders for his business, housing industry is all following a job costing because they know that each individual house is how much they cost it. So that's what we call it as a job costing system. And the other one is a, process costing system in which the products are very identical, very identical. There is no difference. And also they are producing bulk like food, uh, burgers processing by McDonald or uh, similarly the potato chips bags and the cans of different frozen or processed foods. So these are very standard, their weights are very equal, so we can, or a chemical processing. So these are the things that where the process costing system is working good. So these are the main differences between process costing and the job costing. So process costing is a system where the unit cost of a product or a service is obtained by assigning total cost to many identical or similar units. So it's a total cost calculated, then number of units or services provided. That's the way that we can calculate our process costing. So used where output is a large volume of a single homogeneous product. That's one of the characteristics that we use it where the products are in bulk as well as in a homogeneous in nature. One unit of product is indistinguishable from any other unit of product. Product flows evenly through a continuous production process. So these are the basic characteristics or criteria on which we can apply process costing. Each unit receives the same or a similar amount of direct material cost. direct labor cost, and the manufacturing overhead. So unit costs are computed by dividing total cost incurred by a number of units of output from the production process. Each unit of product is assigned the same average cost. So as I mentioned in the beginning, that it is a way of distributing the cash on average basis to all the products because the products are identical. So we are assuming that the cost is same, like for a material, for a labor, and for a manufacturing overhead. Now, process costing assumptions. What are the assumptions? As I mentioned, we are assuming that direct material assumed to be applied at a discrete point in the in the production process. Direct materials are often added at the beginning of the production process or at the start of work in a subsequent department down the assembly line. So materials are added in the beginning and then further processed by the labor and factory overhead is later on. So we divide mostly the cost into the direct material and conversion cost. Conversion cost is a sum of labor cost and the manufacturing overhead. So conversion costs are added equally along the production process, and conversion costs are all costs other than the direct material, which includes manufacturing labor, indirect material, and all other indirect costs. Now, what is a process step in process costing? Sorry. Steps in process costing is summarize the flow of physical unit of output. That's the first that we summarize only. This is basically we are building up a report, and in the first part of our report, what we do was summarize the flow of physical unit. We're just looking at how many physical units are produced and how much with the beginning inventory, how much we process this period, and how much is in the ending inventory, and how much is transferred for sale. So this is a physical count of the units. Then compute output cost allocation base in equivalent units, and then summarize total cost to account for the what we did in this process. Compute cost per equivalent unit, and then assign total cost to units completed and units in ending work in process. So this is the way that it works, like 5 different steps. Summarize the physical count, then equivalent units, and summarize the total cost, and then cost per equivalent unit, and then apply these equivalent cost per equivalent unit according to units completed as well as units in work in process ending inventory. So how do we find out the equivalent units? Equivalent units are important because some units in which is in process are completed by material, but 50% or 25% or 40% completed in case of a labor or the manufacturing overhead. Or we in total we can say conversion cost is only 40% applied or a 50% applied so far. So the number of units what we is equivalent is that how much is the units we count based on that 100% material cost, 50% conversion cost. So we treat it like this, that how much equivalent units we have to calculate so that we can divide it to the total cost to get it average cost. So a derived amount of unit output units that takes the quantity of each input in units completed and in unfinished units of work in process, and converts the quantity of input into the amount of completed output units that can be produced with the quantity of input. So 60 units at the rate of 25% complete. So 15 equivalent units, we can say that if 25% is completed out of 60 units, so we can say that 15 units are considered to be completed in that respect, or we call it as an equivalent. Although in real, these are not completed, but we are trying to figure out the equivalent units, which are equivalent to completed units. So out of 60, 15 are the equivalent to completed units, are calculated separately for each input, direct material, and conversion cost. So weighted average process costing method, that's the method we apply. Like we put weights according to their weighted average, like how much units are completed. So weighted average cost is the total of all cost in the work in process account divided by the total equivalent unit of work done to date. So calculates the average equivalent unit cost of the work done to date, regardless of when the work was done. So assign this cost to equivalent unit completed and transferred out to out of the process and to incomplete until still in process. The beginning balance of the work in process account, work done in a prior period, is blended in with current period costs, smooth out unit costs from month to month. So that's a way that we can construct this monthly report. So the result of the process is two critical figures arise out of the step 5 of the cost allocation. The first one is the units completed cost. So the amount of the physical and entry transferring allocated cost of unit completed and sent from work in process inventory to finished goods inventory. The ending balance of the work in process inventory account that will appear on the balance sheet. So there are two figures. One is the cost of units completed, and the other one is ending balance of work in process inventory. So we see here, this is the flow of the cost in the process. There's an account payable, and we get it various accounts of different into work in process, and this is an assembly department. Assembly department take this accounts payable as well as, so these are basically the material or labor cost we are applying in the work in process, and out of which we are transferring to the next department, which is testing. So we transferred the 24,500 to the testing department, and testing department after that transferred out the finished goods to the warehouse or to the sales department. So we treat this figure as a finished goods inventory, and out of finished goods inventory, we subtract, or we can credit cost of goods sold, how much units we sold, and that's cost of goods sold is gonna it comes into the place against the sales minus cost of goods sold to get a gross income. Now, equivalent units, EU is not European Union, but it's an equivalent unit calculation. So weighted average method with the beginning and ending work in process. So equivalent unit calculation is total work done to date, regardless of whether work was done in the preceding or current period. So we calculate equivalent unit in the particular department without considering what was done before this department or before this process step. So we calculate equivalent units. So weighted average cost if the total of all costs entering work in process from beginning work in process and new work in the period. So here you can get it more clear understanding of this idea if I use my pen. So we see here that there is a beginning inventory work in process 225. We are receiving physical 225 units. Started during this process is 275. So altogether we have a 500 units in the beginning that we are processing on this. So out of this 500, 400 are completed and transferred out during the month. So 400 are transferred out during the month, completed in all respects. So we see that 400 are completed in direct material way as well as the conversion cost as well. Right. So we, in the beginning, we have a 500 units, 225 received from the previous department, and 275 we started the new process, or we can say that it's a beginning inventory of 225. So 225 beginning inventory, 275 started. So altogether 500, out of which 400 is transferred to the next department or to the sales department, or completed in this particular division or department is completed. So transferred. So 400 transferred. Now 100 is left. How much we calculate the equivalent output for material and conversion cost. So they are saying that a work in process ending inventory assembly given in direct material aspect, it is 100% complete. So we treat it as 100. And for direct material cost, the equivalent output or equivalent production is 500 units. But for conversion, it is 50% completed. So 50% means we take 50 out of 100. And by this way, we are saying that 450 is completed with respect to conversion cost. So this is the equivalent cost. Equivalent cost in terms of equivalent output or equivalent unit in terms of material, it is 500. Equivalent output or a unit in terms of conversion cost is 450. So calculating cost weighted average. So far we only cover this two steps. Summarize the flow of physical unit of output and compute output cost in equivalent unit. Now step 3, 4, 5 we are doing here in this case. Step 3, 4, 5. Calculating equivalent unit cost and assigning cost to completed units and ending WIP or work in process inventory for assembly department of a global defense corporation for March 2018. Case 3, weighted average method with the beginning and ending work in process WIP inventory. So we see here that work in process beginning, it's a February. We see the total production cost is 26,100. Cost added in current period given like 19,800 for direct material and 16,380 for conversion cost. Cost incurred to date. So this is the cost added by this assembly department is a 37,800 for direct material and 24,480 for conversion cost. So you see, these are the cost information we have. Now what we are doing is we are dividing this 37,800 with 500. Why? Because completed units in respect of material is 500. So we divide it with the 500, we get it 75.60 per unit cost in terms of material. In terms of conversion cost, we divide it with the 450, which we calculated here 450. So 450, 24,480 divided by 450, we get it 54.40. So this is per unit conversion cost and 75 is per unit, 75.60 is per unit direct material cost. Now, how much are completed and transferred? 400, not 500 is transferred or 450 is transferred. The 500 and 450 are equivalent units, but how much is transferred? 400. So what we do? 400 units multiply by 75.60 plus 400 into 54.40. So this all together is the cost of goods manufactured or assembled in this particular department, completed and transferred. What is left is work in process ending inventory. That is like 100. Now 100 multiplied by 75.50 makes sense because material wise it is completed work in process. But the conversion cost is 50% completed. So we cannot multiply 100. We have to take a 50 into 54. So this way we get it this conversion cost work in process ending inventory is 10,250 work in process ending inventory 100 units, but the cost is not allocated simply like we multiply 100 with the average cost. So the important thing that this figure should be equal to this figure, right? And we have to distribute that into completed units and work in process. So far it is important. This is the main idea of this topic is that we have to calculate equivalent units EU and then we have to allocate this weighted average. So a distinct feature of FIFO or FIFO process costing method is that work done on the beginning inventory before the current period is kept separate from work done in the current period. Assign the cost of, because it's a first in first out method, so we have to keep it separate. Assign the cost of a previous accounting period equivalent units, the beginning work in process inventory to the first units completed and transferred out of the process. Cost carried forward from the previous units periods are assigned directly to the completed goods. So assigning the cost of equivalent unit work during the current period is first to complete beginning inventory, next to start and complete new units, and lastly to units in ending work in process inventory. So we see here that step 1 and 2, work in process 225, started during the current period, given 275, so total is 500. Completed and transferred out during current period from the beginning work in process, which is 225. So we transferred it 225. Now 225 does not have a material because material is already completed. So we see here that 225 is by material, it is 0. And so we have this given information like completed and transferred out during the current period from the beginning work in process. So 225 into 100 minus 100, which is 100% complete. Then the next one is 60% complete. So we apply 225 into 40%. So 40% of 225 is 90. So we see it's a 90. Now we started and completed 175 because we total completed 400. So out of 400, 225 is from the beginning inventory and the remaining 175 is from the current start. So start and completed 175. So it is materially completed 175 and also conversion cost completed 175. So we figure it out that this way that we sell again 400 units, but 225 from the work in process and 175 from the started in this work in process ending inventory. That's 100, similar like the weighted average one, and 50 is the first. So by this way, you see here uh, work done in March only 500, sorry, 275 and 350. So we see here work done in March only is 275 and 350, but there we considered it as a 500 and as well as 300, 450, but here we are getting a different values, 275 and 350. Now what we do, we again, these are given values of the cost and we divide it with the numbers what we are getting from this equivalent step 1 and 2. Now when we divide these, we get a different per unit cost like a 72 and 52. How we apply this, we have to apply the work in process beginning inventory 225, and we you see that we bring this to 26,100 from the previous. So we apply this work in process beginning inventory 225. Cost added to the beginning work in process in current period is 468, like 0 into 72 plus 90 into 52. So this one is the cost. Because no material is added here, we only added conversion cost of 40% on the unit. So that's 90 into 52. So we get it. This is the total cost added in the 225 units. So we multiply started and completed 21 because 175 completed with the 72 cost, 175 completed with the 52 cost. So this is the cost added by this department particular, and the total is 52,480. And work in process ending inventory is 100, which is 72 multiplied by 100, 70 plus 15 to 52. So we get it this one. Although the total is again the same like in this case 62 to 80. But now what we are doing, we are charging a different cost to the only change here, if you look at it carefully, the only change is here is that the cost we are transferring to the next department or to the completed one is 52,480 here, and here we are 52,000 only, not 480, but here we are transferring 62,480 and 9,800 for work in process, but there we are charging 10,280 for work in process. So if we summarize, and this slide is summarizing what we discussed, the two methods, which one is weighted average and the other one is FIFO method. So unit costs can be differ materially between the two methods when direct material and conversion cost per unit vary from period to period. So that's the reason that if there is a different of material and factory overhead cost over a different periods, and that can be change in the wages, change in the electricity charges, and any reason can be changed the price cost of these two different time periods. So physical inventory level of work in process are largely in relation to total number of units transferred out. So we see here the difference of 480, uh, in FIFO method and weighted average method. So it's more in FIFO for the cost of units completed and transferred out is more in FIFO as compared to weighted average, but it is in work in process ending inventory, it is less. So it's and then there is no change. So bottom lines are not changing, but only changes in cost of units completed and transferred and the ending inventory work in process. Standard costing and process costing. So standard cost replace actual cost in equivalent units calculated, and standard costing help to simplify the record keeping and costing. And variances arise due to difference between the standard and the actual cost. So this is a standard costing method. So as I mentioned, we discussed three different methods of this equivalent unit as well as the cost between the units transferred and completed and the work in process ending inventory. So here we see that this is the third method we are applying here. Work in process beginning inventory 225, started this period 275, 500. So completed and transferred during current period is 225 from the work in process, and started and completed 175 from this. And we see that there is such thing like it's very similar like the FIFO method. So we see here direct material is favorable under this standard costing. And the objective of doing this is to find out, we divide this, this cost is divided based on our previous cost of 225, 54 and 74. Uh, and how we calculate, because 90% 90 units are completed uh, out of 275 in a conversion cost, and the remaining are not completed. So we divide it in this way and among the direct material and conversion cost. So we get it this way, like 23,940, and the bifurcation or the division of this cost into material and conversion cost. Then direct material and direct labor. So we get it this way. Cost added in the current department, cost added in the current department is this. Now, so 61,300, 23 work in process beginning. So 4,890 added by this, 0 for material and 90 for conversion cost at the 52. So it's going to be 28,800. And we total beginning inventory started and completed 175. So we divide this into 175. I've converted 74 and 54. So we get it 51,200, and we divide this by 74 and 54. This 100 as an ending inventory and 50 as an ending inventory. So what we get it here is that the cost added in current period is 2390, and the actual cost incurred is 19,800. So by this way, we have a 550 favorable and 17,010 as an estimated cost. And we see that the actual is 16,380. So we get it 630 favorable. So these are. Now there is a possibility of using an hybrid, mixing the two or two of the methods of these all three methods. So hybrid costing system blends characteristics from both job costing and process costing system. Many actual production systems are hybrid ones, And we see that examples includes manufacturing of televisions, dishwashers, washing machines, as well as the automobile manufacturing, such as Ford. So they are using hybrid type of some processes, some costs are they are using as a processing cost, costing, and the other one as a job costing. Transferred in cost are cost incurred in previous department that are carried forward as the product cost when it moves to a subsequent process in the production cycle. So also called as a previous department cost, as I use this word in my previous slides, like cost transferred from the previous department. In a processing of a product, different departments are working on a product. So every time they receive product from the other department, they process it, their job, and then they transfer it to the next department. Next department may be the finished department or sales department, but their job is to get it, process it, and transfer it. So in that case, whatever the product we are getting, we are treating it as a product we are taking with the cost incurred by the other departments, and we process, we add up the cost, and then transfer to the next. So a physical units move from one department to the next. Their jobs, their cost per equivalent unit move with them. Journal entries are made to mirror the process progress in production from department to department. Transfer and cost are treated as they are separate type of direct material added at the beginning of the process. So they treat it as a material, or they treat it as a their supply for processing the purpose. So transferred in cost and weighted average method. Units transferred to the next operations are 100% complete as to transferred in cost, because these costs are simply carried forward from the previous process to the current one. Transferred in cost in FIFO method is the amount transferred out will be based on applying the FIFO method. Each department is regarded as being separate and distinct from accounting purposes. The amount transferred in will be amount transferred out from the previous department and treated as a material contributed at the beginning of the next department operation. So this is simple and very straightforward. And what we discussed so far is that we want to charge the processing cost, or apply the process cost method. And while applying the process cost method, either we can adopt for a weighted average, which is the simplest one, or we can go for a FIFO, which is a little bit complex, or we can apply the standard costing in order to see the variances between their actual and the estimated or budgeted ones. So this is all about this chapter, and these topics.